All right, welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and get a lot smarter. And I think in order to do those things, you have to understand what in the world is happening with markets. Markets are, of course, hovering around record highs, but I want to be a little bit of a Debbie Downer. I want to put a little black clouds over your sunshine and your ultimate parades here with a couple risks, three risks that markets are up against right now that you need to be concerned about as we get into the back half of the year. Risk number one, and before I do that, I have to give a shout out to Henry Allen, macro strategist at Deutsche Bank. He's the one, really good note, highlighting some of these risks. Not that I didn't know them, but I want to give Henry a shout out because he did good work. First up, risk here, inflation. Henry notes that after a lengthy period of above target inflation, investors are clearly alert to the risk of rebound. That will likely even be more of the case now as the Fed has reduced interest rates, have sent up a lot of asset prices even higher. Any slight return, any sniff of a return in inflation, this market may not like that, and it could sell off, hence I'm calling it out a risk. Number two, according to Deutsche Bank, recession. Investors are still convinced that a soft landing is a done deal. If you're wondering what in the hell is a soft landing, it means the economy is not going to fall off a cliff because the Fed has lower rates and everything's great and the market prices that stuff in. But recession risk is still very much top of mind for investors. Henry noting futures expect 190 basis points of rate cuts from the Fed by end of 2025, in large part because economic growth may slow down. So that's risk two. I hope you're hanging with me here. Number three, last but not least, stock valuations, something nobody likes to talk about. I like to talk about it because I was a former stock analyst. I like punching numbers in the spreadsheets. It's still in my soul. Stock valuations near record highs. Any disappointment in terms of corporate fundamentals, that will be likely met with stiff resistance by investors, aka Mr. Market. So those are my three risks for the market you need to pay attention to. You're very welcome. All right, let's stay in all things markets here and bring in Tradeweb Markets CEO Billy Hult. Billy, thanks for sitting through that one with me. I appreciate it.
You're really good.
Yeah, I didn't read any of these notes. Like, this is
amazing.
It's in my head.
Thanks for having me on.
No, it's good to finally see you in person. Yes. I've been following Tradeweb for so long, and I think you're one of the biggest companies in markets that not a lot of people know about. I go to Yahoo Finance, I go to the data page, $27 billion market cap, stock's up 200%. 200%. In the past 5 years. I mean, what are you doing right? Or what are you doing to begin with?
We're creating technology for the bond markets.
Okay.
Sounds kind of straightforward, and it is really. The bond market traditionally, the kind of like the old liar's pokers days. It was sort of like the least transparent of the markets, and we've been steadily applying technology into all of these markets for 20 years. At a point where there's significant change happening now. I think there's something good about being, below the radar a little bit, but we're having a nice moment. In the last 5 years, we've doubled our revenue. 50% of that revenue has come away from sort of Tradeweb's home court, which has traditionally been rates. So we've really done very, very well in ETFs, very well in credit. And hopefully the future is is quite bright.
What makes this market so lucrative? Because clearly you're doing a lot right.
I think it's very interesting, right? There's a moment in time where we can kind of say debt markets are growing. The central banks are playing a lesser role in the markets that Tradeweb operates in. Private sector intermediation is kind of back in vogue, and I think the wallet is considerably large and big and growing in the space. So it's a really, really interesting kind of moment in the market. And we haven't even talked about kind of, the election, all the things that you mentioned around the Fed. This is kind of a moment where, the fixed income markets are at its most interesting.
What does a Fed rate cut mean to a business like yours?
It's good. We're going to wind up having kind of ultimately higher rates than we've had over the past, bunch of years. I think having a real rate is good for our business. And I think at the end of the day, one of the things that's great for our business is ultimately volatility and sort of indecisiveness around where we're going with the rate outlook, which, as you know very well, everybody has an opinion. I think 70% of the people were wrong when we cut by 50 basis points, and we'll see where we go from here. But it's an absolutely interesting moment, in the marketplace.
What do you think? I mean, you've been at Tradeweb, since day one?
Close to day one, not quite day one.
You've seen a few market cycles. I mean, you look like still a young guy. I mean, that's cool, but you've seen a few market cycles.
Getting older by the day.
I mean, what's your take on the markets here? Do you think it is now truly off to the races because as these rate cuts penetrate the system, or are there words of caution you need to provide people?
I think hard to know, and I think you would be smart to have kind of some words of caution given the uncertainty, in the geopolitical world. We have an election that's coming our way very shortly. I think that there's a moment, obviously, to feel kind of bullish around sort of the Fed being very proactive and maybe hopefully ultimately right in a lot of ways, but we'll see. If anything, I would say it's been interesting just to absolutely witness how resilient the
I thought markets would be down the tubes. I mean, we're approaching election day. I mean, this is one of the most contested presidential elections I've ever seen in my lifetime. And I look young, but I'm not as young as I would suggest or present on TV. I mean, this is wild stuff.
I haven't stopped reading
Yeah.
about it, but you have to calibrate yourself around all of the news.
What makes it so
tough.
resilient? What is it about our markets that they can withstand another wild presidential election season?
I think we are optimistic at the end of the day, ultimately a very optimistic country, and I don't say that naively. I actually think we are very optimistic, but there's absolutely more kind of tension in the political system than either you or I want there to be. I'm not sure, when I wake up on election day, how good we're going to feel.
You just got to look at it like this. Just read the paper like this.
It's going to be a long night into a long next day, and we'll see where we wind up.
Is it hard? I mean, your business, of course, is regulated, but is it hard to get business done now? You've been one of the few companies that have been able to make acquisitions over the past 4 years. What would make life easier for you as a CEO?
We've done 3 acquisitions in the last year. And I say that because the company has largely kind of arrived at this moment, through real kind of organic growth, right? We felt very strongly that we could build technology and have it applied to all these different interesting markets, and we would win. So we've kind of added a little bit of some sprinkling around acquisitions. I think we're going to be focused on, in a way that you would expect, integrating those acquisitions in a very straightforward way. And I think we have a tremendous amount of forward technology growth just continuing to be applied to the businesses that we are in, whether or not that's government bonds or credit. I make this point all the time, and it's interesting. The number one competitor that a company like Tradeweb has is the telephone. It's 2024.
The old-fashioned.
And people still sometimes operate and deal in the market at certain moments in time like it's 1994. I don't know if they're still getting pizza on the trading desk at 9:30 in the way that they used to, but there still is that kind of comfort zone around certain types of transactions getting done on the phone.
So you think that goes away?
I think that there's going to be a lot of forward progress around getting a large amount of those trades done electronically. Will there still be a moment in time where someone 5 years from now picks up the phone and does a trade that way?
It's nice to hear a voice. It is nice.
Yeah,
to hear.
We're still, I say this all the time. It's interesting, Brian. We're we're a technology company, but we're a technology company that has lived and breathed in the sort of ethos of the market for a long time, and we really value the personal relationships kind of side of the business. So we're not just a faceless technology company that comes in and rolls out our technology.
No names needed.
Nobody hears from us again.
Where has the regulatory environment the past 4 years been onerous?
It's a good question. I would say specifically speaking in our business, not so much. It has not been onerous, and maybe you might get a different answer from somebody living in a different kind of part of our ecosystem. Generally speaking, regulation in terms of how it's been applied to fixed income and derivatives has been a sort of gateway or a door opener towards more transparency and more electronic trading. We've been able to have a decent amount of influence in terms of, if we're going down this path around regulation, here's the right way for it to be implemented. And I think in a good way, we've been able to kind of have our voice heard. But it's a process. To make an obvious point, and you know this really well, if you wind up applying regulation into these pretty sophisticated markets the wrong way, you can have the unintended consequence of actually hurting liquidity more than helping liquidity. So it's always about how it winds up getting applied.
It's a good setup for this next one. So every September, I go out and spend a lot of time on the West Coast. Goldman Sachs Tech Conference, Dreamforce, Salesforce. This year, there was just a next level of excitement and real technology and AI. This is real
Yeah.
stuff. This is not BS. Like
Yeah.
AI in new forms is coming to market, and it's going to be very transformational. At least that was my takeaway.
Yeah.
I mean, how does that
Agreed.
impact investing in markets? I mean, and do you see unintended consequences?
Well, I think we're going to continue to see sort of data-driven execution in fixed income trading, and we're going to continue to see machine learning get applied to how sort of the search for liquidity occurs in fixed income. So without question, the next level of technology is going to be more sophisticated. Interestingly, because we were talking about relationships and we were talking about people, do we see people still being a big piece of the equation ultimately in terms of like how this whole world works? I would say we do. Mm-hmm. So I think you can have a world where the kind of client base or the ecosystem becomes more and more sophisticated around emerging technology, whether or not that's machine learning or traditional AI. I also think like the human kind of connection or the human factor isn't going away.
Does it put more risk in the system though?
It can make markets or trades, potentially more crowded.
Mm-hmm. Interesting.
So it's something to kind of, if everybody sort of is searching for liquidity in one specific area, is there a possibility that the market can kind of get lopsided kind of here or there?
It's kind of concerning.
Yeah, a little bit. I mean, it's something to kind of think through.
Yeah.
It's interesting.
Is there are regulators like attuned to this? I mean, when you talk to them, hey, there could be a crowding in like these 3 stocks because of AI models.
I think they are. I mean, I don't know. It's a good question. I think that they are. I mean, I think that we're still ultimately kind of dealing with a lot of kind of very new things, and I think the regulatory world is going to have to keep its eye on it. I think the interesting thing is there's a lot of thoughtful people around this that will more than happy to kind of share a view, and hopefully it all gets kind of implemented. We were talking about the election, I wasn't sort of surprised that, that Trump has gone from a sort of non-Bitcoin fan to a big kind of Bitcoin advocate. But obviously, in certain areas that we're talking about, depending on who wins the election, we might have a sort of course of direction that goes one way versus another. These are the things that keep us on our toes.
Yeah, you could absolutely say that. Hang with us, Billy. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. We're here at the NASDAQ market site, right in the middle of the financial action in Times Square, New York City. Really having an amazing conversation with Tradeweb Markets CEO Billy Hult. Billy, there was an interesting story that I didn't realize, and I've been following Tradeweb for a while. We've never talked before, but I've been following your story. I didn't realize you were in the towers on September 11th.
Yeah. Still,
wow.
I mean, still, this, like, still like a really tough day. All these years later, like I come out, last week, and I still look at this. First thing I do is look at the sky, and my brain goes to, is it the same exact color sky that it was, in 2001? Because something about that sort of vividness of the color blue will stay ingrained in my head forever and ever and ever. I kind of call it the wound that never heals. It's kind of that permanent kind of wound. They say like time heals all wounds. I'm like, I'm not sure because of the impact of that day. So we were on the 51st floor. We were a young company then, still trying to kind of figure it out. We were fortunate that the company, we were on the 51st floor of the North Tower. So we were really fortunate that we were all able to get out.
The whole team made it out.
The whole team made it out. As you know, everybody lost people that they cared about that day. So it remains, an incredibly sad day. If I were gonna maybe mention sort of one thing that probably like will forever kind of stick out in my mind, it would be as we were coming down the staircase, that morning, the age of the firemen is something that I'll never forget. I was 30, and they felt like and looked like kids to me. They were probably in their mid-20s, a lot of them. So it's those kind of things that kind of in some ways, stick with you forever.
Yeah, so I was trying to leave my college parking lot on that day, so I was not in New York City. But what do you think that did for a young company like yours to experience something absolutely horrific?
It galvanized us in a way that you would expect it to. And we were very focused on making sure that the company stayed in business and the progress that we had made we continued to make. So it without question, it galvanized us. I'm sure on some level it also put a little bit of life in priority. Everybody by definition when they're younger, work so hard and put such a big priority into their whole work thing. What a moment where you realize what really matters. It's the people you love, your family.
Did you see yourself, I mean obviously not that day, but you're 30 years old running Tradeweb, and did that?
No.
No, where did you start there?
I was at the beginning of sort of really figuring out what would wind up becoming a very interesting and great career for me. And I was loving what I did. I was really interested in how technology would be applied to the markets, and then this concept of how does behavior change over time? How do you get someone from picking up the phone to wind up embracing and using technology? That was really interesting to me, but the concept of what the company could actually become and maybe my role around it was probably not necessarily something I lived with all the time.
Are there other team members that were able to leave that day? Are they still with you?
Yeah, there are a bunch of us that walked down the stairs, that day together that are still at the company, and it's it's a great group of people that have been through, a lot in terms of the company's growth and direction. And so those are the bonds and those are the friendships in some ways that persevere.
Do you think that's what
forever.
sets you apart versus competitors? You have that moment, that shared bond, but that fighting spirit?
It's probably one of the things that defines the company. I think there are probably, hopefully, a few things that set the company apart. I think the culture of the company, all the way through, even with people that have been at the company for 5 years, 2 years, and 10 years, I think the culture of the company is quite strong, in part because we really believe in the concept of technology and the human experience in some ways living together. You made the point that this is the first time, even though we've done things together, this is the first time we've actually been face to face. I'm a huge believer in the sort of benefits of
it still matters
of this moment mattering. I think it does still matter.
How do you keep that culture and pass that baton to the new folks coming into the company?
You are sort of relentless about the stories along the way, and then you live and breathe it yourself, and then hopefully that winds up all getting picked up.
Does this generation have your tenacity?
I ask myself that question all the time. I think some of them do and some of them don't. And you get the full me when you're talking.
What's the message to the ones that don't? I mean, how do they, is it either they have it or they're not going to get it?
I think that on the edges they can be sort of in a really nice way pushed in the direction of getting it. Is it easier when that thing is switched on? Of course. And I sort of make the point a little bit, which is, when I grew up in the business, in a way that will make you laugh, everyone was pretty tough and pretty resilient and
different
pretty
cast of
strong.
characters, right?
Yeah. And so, you had to have those skills, otherwise you were going to be left behind pretty quickly. I think if you have that now, you can go pretty far pretty quickly, because I do think the competitive landscape can be a little different. You'll love this. I had because when we were talking, before the cameras went on, I mentioned the company's going to move, and so we had a town hall about 2 or 3 weeks ago, and one of the things in the town hall that came up was the concept that, certain people in the company, the thing that they were most excited about was that we would have, great new offices.
And I was with oat milk.
With oat milk, and I was like, no, time out.
Yeah.
No, that can't be the thing that we're most excited about. Because I grew up in a world, and you'll really appreciate this, the best run firms had the worst offices.
Yeah, trust me, I've come through.
Right?
I've come through some.
And that was
good offices.
that was a badge of honor. Like you went to Goldman Sachs in 2004, you know, and that firm at sort of you know, within like the fixed income world was like top of the totem pole.
So
those offices were like ducking your head.
I got a story for you. So I started off as a stock analyst, and right out of college, small firm, and there were times that first year I would sleep under my desk. Like I'm full stop. This is no BS for camera purposes. Like, but that's how I learned.
Yeah.
My crazy thinking at the time, Billy, was like, all right, if I can cut out that like 3-hour train ride, that's more that I can produce.
Yeah.
And I think that's like, I don't know if that's a good thing or bad thing that I slept under my desk, but I don't know, maybe it was, I don't know.
I would imagine that it was like a really good thing for you.
Yeah.
Right, and it was your choice to kind of to have that level of intensity as you were kind of like building your career, and those are the kind of things about your own sort of experience in some ways that you'll never kind of forget. I don't think there's anyone like sleeping under their desk at Tradeweb.
That's a good thing. That is a good thing. Like, so what is your ultimate goal? So $27 billion market cap, stocks up 200% in 5 years. You know, 5 years, are you at $75 billion market cap? I mean, what does it look like?
You know, certainly not like making any kind of like huge predictions about kind of where all this goes, because to your point, the sort of markets can be kind of.
But you are publicly traded, so I get it.
Right.
I get it.
But I think that like the company has tremendous opportunities. Technology is continuing to kind of create a reality where the markets are more connected than ever. And Tradeweb has played this kind of leadership role, being in all these businesses that we are in, around, you know, the clients want almost like this concept of like one-stop shopping for fixed income, and we are like very, very well positioned, being in kind of the rates businesses, the derivatives businesses, and having made as much success as we've had.
So you'll stay inquisitive?
We'll stay open-minded, and we'll stay, I think, extremely focused on continuing to build out our sort of organic approach to bringing technology into new markets. Mm-hmm. That's a big one.
All right, well, we will have to leave it there. I'm going to probably maybe sleep under my desk later. No, I'm just kidding. I'm kidding. No more. I'm not doing that anymore. Just
maybe
to be clear,
a nap.
I do not sleep under my desk anymore. I
maybe
go home at a normal time. Yeah, maybe a nap. Billy Hult, Tradeweb Markets CEO. Thanks for giving us some time here at the NASDAQ Market site in New York City. Really appreciate it.
Appreciate questions.
Thank you so much.
Thanks very much.
All right, that's it for the latest episode of Opening Bid from the NASDAQ Market site in New York City. I'm Brian Sozzi. We'll check you soon. Are you a curious, hungry investor on the hunt for the hottest market commentary? Then join me, Yahoo Finance's executive editor Brian Sozzi, on Opening Bid, the show with unrivaled insights from top money managers and analysts, and intimate access to the biggest power brokers in business.
We want to build vehicles that people care about, that change the world.
Since 2009, we've had 28 pullbacks. Every pullback comes with something. It's called bad news.
Plus, we'll bring you the very best perspectives on the most important stocks in the entire market. The goal? To get you thinking differently about your investments.
The return of travel was a big trend. Walmart is unbeatable. Amazon saw a 12% revenue growth, and the year of AI. I mean, NVIDIA on fire.
A lot of people are coming to this game, and especially we've seen it with the meme phenomenon, is that this is a get-rich-quick scheme. It is not. That this is gambling. It is not.
Watch and listen to new episodes of Opening Bid every Monday, Wednesday, and Friday starting at 8 a.m. Your journey to smart investing begins right here.